You know, the phrase makes your head spin. Well, it continues to accurately describe the market these days, doesn't it? I mean, even within a single session, the pendulum is swinging back and forth so much. The Nasdaq's up, values down, Nasdaq's down, values up, sectors down. It is nuts. Now, rationale is written all over that, at some point, maybe things are going to clear up for us. But so far, nothing has cleared up for us. I mean, investors really, I got to tell you, probably losing their minds trying to get a grip on what's happening. I think people can handle up and down, but when it all happens in one session, people ask questions. Are there algorithms? Have they gone rogue? What exactly is happening? We brought in two of the best, Keith Fitz-Gerald, Group Principal Keith Fitz-Gerald, Nicholas Wealth Management, and David Nicholas. Hey, Keith, what the heck is going on? It feels like the market is somewhat schizophrenic here.
Well, it's important to take a step back and take a deep breath, because what's really happening is two things. They're both sides of the same coin. You've got highly leveraged traders in fear of what the Fed does next, and you've got the Fed in fear of what highly leveraged traders do next. So the algorithms are playing ping pong, but individual investors actually don't have to keep their money moving. They have the upper hand because they can step back, take a breath, and pick their battles in ways that institutional investors can't.
So, David, just be cool.
Well, I think, yes, I absolutely agree with that. But I think the market is asking, the biggest question is this a reopening day or is this a COVID day? And, if it's a reopening day, then you've got the Russell and the Dow do well. But if it's a COVID day, then the Nasdaq rally. So I think there's some conflicting information there. And also then it's also the interest rate game. So inflation is a sign of reopening, but then you have rates that are lower. So there's all this conflicting data points that are thrown at the market. So I think the market is having a hard time deciding which one is it going to be 6 to 9 months out. So I think that's some of the volatility that we're seeing is really trying to answer that question right there.
Yeah, I mean, we're seeing it happen all in the same day. Pre-open, Nasdaq's through the roof. 2 hours later, Nasdaq is cratering. Why is it cratering? Interest rates must be up. No, interest rates are down. So here's the thing. We're running out of leadership categories, right? And for a while now, we were just relying on the $1 trillion club. Those big names that grow, we feel comfortable with. Today, a lot of news, including that there are at least 70 antitrust probes on Apple, Amazon, Google, Facebook. So David, let me go back to you. Would you still be a buyer of these names, particularly on any kind of weakness associated with this?
No question, I'm a buyer. And if you listen to our friend Keith on the panel, he's always talking about buying the best, forget the rest. We're all about buying quality. And I think quality will win out in the end. But I think with the Nasdaq, you can be patient. There are some technical levels that it's having a hard time breaking above 14.9. Yeah. We saw this back in April, couldn't break above 14. So if you're patient, you might have a little bit better buying opportunity. We're still buying quality right now, Charles.
Keith, same question to you, but I'd also add separately, these Chinese tech stocks are up today. Kathy Wood sold all of hers. So would you be a buyer of American big cap tech and or China tech?
Well, David and I are firmly aligned on this one. Buy quality, because above all else, that's what's going to protect you and grow your capital. As for Kathy Wood, she is exceptionally bright, but we don't know all the variables that went into her decision. We exited Baba, we exited Didi. There is one Chinese tech company that I am interested in, and I do own. That's Tencent, because they've got their fingers in everything, and bluntly, right, they haven't managed to incur the wrath of the Chinese Communist government yet.
Yeah. I like NEO here as well. 1 minute to go, guys. What's going to be the big thing that moves this market next week? Let me go back to you, Keith, and then David.
I'm saying it's going to be the lead up into Apple and the transition from recovery to expansion.
Yep, I'll say equities right now, equities are priced for perfection. So we've got to fire in all cylinders. So I think as we can get through the next couple of weeks of earnings, if we can still get quality earnings, I think that'll give support to the market that we can get to the next leg higher.
Should we care, David, that the banks had great numbers and were flat or even mostly down?
I think it's just short-term noise. I think 3 to 6 months out, banks will be higher as rates rise.
All right, because we don't want to have another replay of the first quarter. Amazing results and stocks mostly yawn. If you're lucky, they yawn.